And first of all, warm welcome and good evening to each and everyone who have been joined in this evening. It's an absolute pleasure to welcome you all to today's IRE Talks. I'm Professor Sandeep Bansali, and I'm really very excited to bring you back with the brilliant minds who can share stories of the innovation, learning from the best of the industry. And today's IRE Talk is truly exciting as we welcome a dynamic voice from the fintech world, Mr. Manisheel Gautam. Uh, Mr. Manisheel Gautam is Chief Marketing Officer at Alt DRX, and he brings a deep expertise in the financial inclusion and fintech innovation. His work at Alt DRX, a key player in driving accessible financial services, is shaping the future of the industry by making finance more inclusive and effective for everyone. So for all those things, or for all the people who doesn't know about GIBS, let me give you a brief introduction about GIBS. So GIBS Business School is based in Bangalore, but it's a place where education meets innovation, and students are empowered to become the future-ready leaders, entrepreneurs, and the change makers. GIBS offer top AICT approved program as well as BBA from Bangalore University. Which makes us unique is our practice schools of excellence, where we focus on real world learning through specialized schools like School of AI, the Finishing School, the CPMP, the School of Youth Leadership, and the School of Happiness and Mindfulness. We believe education should not prepare the students just for the jobs, but also to shape them into the leaders, thinkers, as well as entrepreneurs who can create an impact in the world. And where the IRE talks comes in is the innovation research and entrepreneurship talks is the way to bring the industry leaders into the classroom. And it's a platform where we get to hear the first-hand experiences from the visionaries, entrepreneurs, and the business leaders who are shaping the future. Through these conversations, we want to inspire young minds, equip them with the practical knowledge, strategies, and insight that wouldn't fix into the textbooks. So I'm really excited to have and hear from Mr. Manisheel Gautam, Chief Marketing Officer at All DRX and co-founder of Investorey. I would say I'm sure Sir has worked in both the industries, right from the fintech as well as marketing, and brings a huge wealth of experience in creating the tech-driven solutions for financial inclusions as well as the real estate investments. And looking forward to hear from you, sir. Over to you. And one small information to all the participants, in case if you have any doubts, any queries, you can put it in the Q&A. Probably we'll take it at the end of the session. Sir, over to you.
Thank you. Thank you. We had a very good conversation last time I was at GIBS school. And the pleasure is all mine to be here talking to people around this topic, which has been close to me for the last 5 years. I passed out of IIT in 2014 and joined a small startup called Ola. We were a very small startup which was using technology to change the way how we do things. And in the last 10 to 15 years, we have seen so many new technologies come up without which we right now we can't think of living our life. Financial services included is one of them, and I will touch upon what has changed, what I think has created impact, what do future entrepreneurs can work on, because everyone thinks that all problems are solved, while if you go deeper, most of the problems are not even being touched. And for a country which is 150 crores in size, the scale is massive. So thank you all for being here. I'll just quickly put across a very simple deck. I've not done anything elaborate on this because I want this to be more conversational. The deck will have some pointers on what I'm going to talk about. So I'll just put that across for everyone to have a reference. Yes. So you can see my...
Yes, it's absolutely perfect.
Yes. So I'll quickly go here, touch upon things which I feel are going to be game changers. Quick Before that, I just want to get into a quick introduction. Quickly touch upon what is fintech. also touch upon is my presentation visible? Is presentation screen is visible, right? Okay. So what I will do is before in the first few minutes, I will touch upon what I think on my top thoughts on the topic. Second is I will touch upon what financial inclusion means for this country. And then what fintech means as a game changer, because everyone talks about fintech, but not everyone knows what fintech is. Uh, so yeah, I'll open the forum starting with this quick trip down the memory lane. Picture this: you are in 2011. You're standing in a long, sweaty queue at ATM to withdraw cash. No UPI, no tap to pay, no digital wallets. If you wanted to send money to a friend, you literally either have to go to a bank and fill a form or hand over notes, which might be torn. I can't imagine going back to that life anymore, because everything is right now in the touch of my hand. Even if I want to send 1 rupees to a panwala, I can do that without worrying about how will I get the change. But the way things have changed, back in 2011, only 35% of the Indians had a bank account. Fast forward to 2025, nearly 80% of the Indians have a bank account. That's the financial inclusion revolution Indian government has brought across, but obviously the changes have been done by the startups which have worked on the background, and now are behemoths doing this. Uh, but even this, even your 20% population who do not have a bank account, that means there are 30 to 35 crore people who do not have a bank account. That will include a lot of countries in Europe in that population. Uh, but we have come a long way, but the journey is still not over. We are still in that journey. We're still evolving. We're still creating innovations which we are now exporting outside. But to set context, first question is, what is financial inclusion? In very simple terms, it is ensuring that everyone, either rich, poor, urban, rural, can access financial services like banking, credit, insurance, making these things affordable, convenient for you, and relevant for you. So you can access them whenever you want, and not let anyone else decide if you can access this or not. That's where, in a crux, what financial inclusion is. And beyond this, what is fintech? Fintech or financial technology is a magic wand. Fintech is making financial services faster, easier, accessible. Think of mobile payment, think of digital lending, think of robot advisors, think of insurance you can buy with a click. Every few years, a startup or technology will disrupt how we handle our money. And to give you to give you context on what has changed, think of a world without fintech. Investment in stock market would have meant stacks of physical share certificates you would have stored in your cupboard, gone to a place to redeem and get that money in, and then use that money again to buy more physical shares. You would have to visit ATMs daily, praying that you don't misplace cash. If you wanted to send money across borders to a different country, you don't know how much money you would have paid just to send that across. Thankfully, we are past that. Those were tough days, but we have changed, and now we'll quickly get into what has brought that change. How India has gone into a fintech revolution from 2010, 2011 is when we started to go into that financial revolution, that everything has to be technology enabled. And this has changed the way we have approached. Is a change the way we have approached financial technology and financial inclusion. Game changers in financial innovation. If you see these words, you will think, oh, these words are. I see them every day. It's normal to me. But for people who have not had access 5 years ago, this was a game changer. Now, the to get to this, the background of everything of all of these things was Aadhaar. And to give you some anecdote, when Nandan Nilikani was doing the Aadhaar, our batch in IIT Bombay was the one which was developing the UID code as our first year project. Like the whole batch was doing UID project because that was going to be the fundamental of how Aadhaar was going to be. And we realized that sometime later. But Nandan Nilikani basically gave us our first CS 101 practical assignment, that we had to decode how fingerprint recognition will work. Aadhaar was a game changer because before this, uh, we did not have a common ID. Like PAN is only for people who want to pay taxes. You will have passport, you will have driving license, but these are not unique identifiers. The unique identifier which can basically completely take over the population. Aadhaar was the backbone. Uh, it's a to give you some it started in 2009. That is when I went into IIT. It happened then. It's a 12-digit number. Today 1.3 billion people have Aadhaar, which is like 90% of our population has a unique ID, uh, which is now similar to what you will have a social security number in US or in Canada for that matter. Now we have, after this we had one number which can basically link everything you do. Obviously it comes with caveats that now government can track whatever you're doing, but that's a side effect we'll have to live with. It is now enabling everything from a bank account to government subsidies. It's the foundation of the digital economy, letting people prove that they are them with either a fingerprint or a scan. From Aadhaar, we moved to the UPI. UPI came into the picture. People did not know what will happen. Paytm was there before UPI. Wallets came in before UPI, but UPI was the change which everybody wanted. In 2016, now it's a unified payment interface. That's what it means. But in simple terms, everyone in the banking system is connected. All the banks are connected. All the financial services are connected. All the technologies which are built onto UPI, which is also technology is connected. Basically, it's like a foundation. Like what ONDC is trying to do with e-commerce services, UPI did it for all financial services. In 2023, I don't even need to give you numbers, but we processed over 100 billion transactions from UPI. Now that number is going up by 2x, 3x every year. It takes away a lot of cash from circulation, but what it does, what it did, and what it does is create trackability of your payments, make sure that you are getting what you're owed. And the main factor here is it takes money to print money. It takes money to actually make those coins. So if you coins are now outdated, but the amount of money you would spend to print 1 rupee coin and then distribute it, the cost was more than 5x of the actual value of that rupee. That did not make sense, right? You had 1 rupee, why would I keep giving 1 rupee while the government is spending 5 rupees to do that? UPI changed that. The second thing which came across was the Pradhan Mantri Jan Dhan Yojana. We all see government initiatives as these are for underprivileged. These are going to siphon off money. They are not going to do what they need to do. But no, like at least for this was launched in 2014. It has opened over 500 million bank accounts. That's like 50 crores of bank account, and many of them first-time bankers. That's why we have gone from 35% bank account to 80% bank account in 2025. Pradhan Mantri Jan Dhan Yojana was one of the major factors in driving this, and rightly so. It should be given credit that it brought in people who were underprivileged. This was not about dignity, but bringing this all informal people onto the banking system. This that. The next bit which is close to me is investments. Investment digitization was a long painful process. My parents never invested in shares because they thought, oh, it's too painful to do so. Even though they invested in real estate, I would have been very happy if they had bought an MRF share or a Reliance share at that point of time at a very low value, and we would be having a lot of money. Jokes apart, it created like in the whole investment digitization, and it was built on the foundations of technology where banking system was brought together. Everything on investment side was digitized. We had CDSL and NSDL, which are the depositories which hold everything. All of this was created by the government, and so this led to now people going on Zerodha, put their fingerprint, see a stock, just place in a buy order, put money in through UPI, and get it done. That would not have been possible. You go to grow, you put in a auto mandate. People did not even know what an auto mandate was. That you can just say, oh, deduct 1,000 rupees from my account every month and put it into SIP. It was not there. These have brought in changes which are changing, from which we'll never be able to go back. Once you are digitized, once it is easy, then you are not going to go back to a point where you are going to back to physical methods. We are more than 15 crores demat accounts, which is still only 10% of the Indian population. So just for people who are listening, there is a big enough play, and if you're looking to build in the investment space, there is 130 crore of people who are still not serviced by these investments. The other was digital banking. Banks were seen as, oh, I don't want to go to a bank. Hey, they're going to take whole of my day, make me stand in a line, do nothing, go for lunch breaks while I wait for them. Digital banking came to the picture. Now all the banks have digitized. You everything you can do most of the things on the app or on the website. You will still have to go to the bank for some painful stuff, but at least 80% of your work, which would have needed you to go to a bank, is now online. So digital banking was another game changer. And one personally, which I feel the largest game changer was tech-enabled credit. India has always been a financial inclusion starved country. People don't have access to credit. People have ideas. They know they can make money. They know they can do a lot of things. But for doing anything in this country or in any country for that matter, you need money. Uh, with tech-enabled microcredit or credit, people have had access to money. You can get credit at the tap of the button. You can get credit for 5,000. You can get credit for 5 crores, whatever you want. This has led to a lot of micro entrepreneurs who have come across the country, who are setting up their own businesses, setting up factories, setting up workshops. This would not have been possible. India would not have grown as a country if we did not have access to this microcredit, and led both by private banks, led both by private institution, and for people who do it at a social level, where the Grameen financial services come into the picture. And so these are one major technologies which have made things accessible to you. One thing which people just take it for granted is the digital KYC. No one knows, and most of the people who would be joining on the call would not even know what non-digital KYC was. How painful was it to just do your KYC to do a lot of things? Now you can just say, okay, I take a photo, scan my this, take my Aadhaar OTP. Aadhaar again goes back to the without Aadhaar OTP, digital KYC would not have been possible. With digital KYC, everything is digital. Uh, is one of the major factors. Like and just to give people who are listening context, every investment, everything related to finance, you will have to do your KYC. Uh, the government will not let you do anything without you complete your know your customer, which is the major factor. So these innovations are just don't add convenience. They rewrote the rules of access. A farmer in Bihar can now get a loan without a collateral. A street vendor in Mumbai now accepts UPI, and I'm not just UPI. I belong to a very small town called Nawada in Bihar, and I was surprised. And this was 2 years back. I was like, I was trying to give cash, and they were like, "Sir, आप UPI कर दो." We don't have change. And I'm like, wow, this has got to not even a tier 4 town. It's gone to a tier 5 town, village in a tier 5 town was willing to accept UPI. That was the change we have seen. So these have been the major factors which I personally feel have changed the way we approach, because you can build products, but underlying technology, if you understand what has changed and how can you use it for your own product or on your own company which you are trying to set up, this serves as a good place for you to get into. Now getting into the third part is how fintech solves for access, awareness, and affordability. Uh, uh, Now, this will get a little more academic because you need to understand that, and you need to understand the first principle thinking. First principle thinking says that you break down everything into the most fundamental parts, and then you can solve any problem. You don't need to be an expert to do first principle thinking. As every problem can be broken down into five, six individual parts, which will completely take over the problem and solve for it. With fintech, they work on this four principle, which is access, awareness, affordability, and the fourth major point, which is hand holding. And I will get into why hand holding is important, but I will touch upon the first 3 points first. It's not just about shiny apps. It is about solving these big problems, breaking them into smaller problems, and then solve. For example, access, reaching the unreachable. For our country, which is like 3,000 kilometer one way, 3,000 kilometer one way, with one time zone. But if you actually compare this time difference between the east tip and the west tip is 2 hours. Uh, that's the scale of this country. We live up from the deserts of Rajasthan to glaciers of Siachen. We are connected everywhere. And millions of Indians live far from banks, lack documents to open accounts. Fintech fixes this. Take Grameen financial service example, they offer microloans for women using mobile data to gauge credit worthiness. A woman in Tamil Nadu can now borrow 10,000 to buy a sewing machine, no collateral, because the fundamental problem of identifying if someone is credit worthy or not is solved by get understanding what is your data usage. As simple as that. Fintech in 2022, fintech driven digital lending accounted for 89% of alternative finance in South Asia. I'm not just saying India, in South Asia. Second, teaching the unfamiliar. Most of the people don't understand financial services because it's difficult, it's new. There are different technologies, different apps, different companies which are trying to make people understand how to go about things, how to get access to credit, how to open a bank account, how to set up a new company, how to buy that sewing machine, how to buy that find the right seat for your farm. All of this is now there. it People use gamification and to give people some more understanding that if you're trying to create something new, it has to be a little gamified. People need to have fun to do something, then only they pick up something new. It needs to give you that rush that, oh, I've done something. And that's where to if for people who use Zerodha, that's where that one swipe, oh, I have bought a stock, that works for you. Or going on that cred app and swipe and doing a jackpot rush, that gives you rush. So those things work for a company on making you hook to something. And the third most important is affordability. You have to make it viable. For a transaction of 100 rupees, you can't spend 100 rupees. It's as simple as that. It'll only make financial sense if the transaction cost involved in a transaction makes sense for everyone involved. So, for example, with JAR, you can invest in gold 10 rupees at 10 rupees a day. It takes away the total cost from it. These are small bite-sized things or products which make it easy for people and affordable for people. Now, the fourth most important point, which I think which people in India companies in India tend to miss out, is handholding. Indians by default do not want to evolve from their original habits. We still like doing things our way. We still a very culturally bound company. Country we like to stay close to our roots. So for anything new, it needs a lot of handholding. Now that handholding could be in terms of technology, it could be in terms of people helping you do it, or it could be a hybrid. And if someone is looking to build in this space, they need to understand what will be the most viable fit for them. Because without handholding, nothing will work. And another anecdote, we at Ola we used to do in 2014 5,000 rides a day. In 2016, we were doing a million rides a day. In 2 years, we went from 1,000 to a million number, which is almost 100x. Actually, more than 100x we did. But it came from we handheld people to use the app. We handled both side driver and the person who was booking a ride to force them to do something which they like. Oh, this is easy. Why was it calling someone to book a cab? It was as simple as that, but it requires handholding to get there. These solutions are not theoretical; they are transforming lives. Uh, if, for example, a single mother in Rajasthan learns to budget via app, which is in the vernacular language, a small trader in Kerala buys micro insurance to protect his shop. It was not known to them. Now they know. Fintech is making finance inclusive, one step at a time. Every day, every month, every year, we see more solutions. But the scope is far and beyond. So now getting into the main my part of thing, what we are doing at all DRX. Uh, I before this I used to run my own company called Investorey, where we were creating a fintech startup for bringing alternative investments in one place. This was like a succession to this, that we wanted to make real estate investing accessible. Like if you are someone who is looking to buy a house in Bangalore, even I can't buy at this point of time. Will and to give you numbers at this point of time, if the house is worth, let's say, a crore, only 1% of Indian population right now has the money to do it without taking leverage or taking debt or taking a loan. You have to basically bleed yourself to own real estate if you're not the top 1%. It's a sad fact, but that's how the product has been structured. Like with stock market, you can buy one stock at any price depending on what you're buying. With real estate, you can't do that. That's what we set across to change, that we wanted to make real estate accessible. We wanted to make real estate affordable. We wanted to make real estate easy to own. We wanted to make everything digital. And we did that. Like you can invest with us through a daily saving plan where it's like a no cost EMI for real estate starting at rupees 10. Or you can buy 1 square feet in Bangalore or 1 square feet in Hyderabad at rupees 5,000, 7,000, 10,000. You don't have to worry about the paperwork. Everything is digital. You don't have to worry what's the valuation, what is happening, can I sell it. Everything is digital. On the app you can see what your real estate is, where that real estate is, what is the value. If I want to sell it, you can sell it in one go. That's what we are trying to do at all DRX. We want to make uh, everyone in the country get access to own real estate, which is a wealth creator. By the way, if all the kids, if they are here and people our age, they we know. If you go back to your parents and ask them why did you buy real estate, and then they will tell you we bought it at 5,000 rupees. Now it is 5 crores. That's the power of real estate, because your wealth creation happens through real estate. It will happen through equities. And for the general public, if you are investing, 50% of your money should be in equities and mutual fund. 30% of your money should be in real estate and hard assets. 20% of your money you can experiment with different assets. There are new age assets, franchisees, alternative investments. So this is like a ballpark number which normally people follow. So if you're looking at real estate, please go check out the All DRX app to do so. Otherwise, we are on a mission. We know that we will get there, so that from 1% we can take that number to 50% of population getting access to real estate. Because with 10 rupees, and we had this story. When we got our first few daily savings set up, we called our customers, and one was a student who was studying in a college in Ahmedabad. He's like, I want to own real estate. I don't have the money to do so, but this enables me now. So I will save 20 rupees daily till whenever I can, and I will get that real estate benefit or wealth creation benefit from real estate, which I ideally would not have. I would have waited 20 years to buy my first real estate. As simple as that. So I'll not spend more time here. We will get into what people would want to know. What are the opportunities in fintech in India? Because we're talking to entre- early entrepreneurs that who want to do so, who want to understand what can they do in this country. It's a good space for a country which is now financially inclusive, but it's not exhaustive. Only 80% have a bank account. Everything else is still not completely tapped into. So I'm going to put across a few places where I personally feel there is scope if you're trying to build. First one is investments. Investment is, well, there is Zerodha, there is Grow, there are some platform which are doing so, but there is still scope. If someone has a game changing idea, okay, this will change the way people invest in mutual fund. Feel free to develop, because we only tapped into 10% of our population. There is 90% of our population which is still not serviced. So big enough market. The second is access to credit. Digital lending is a big market, has historically been a big market, but 60% of MSMEs still lack formal credit. We, with the current system, if you are looking to build in the space, there is a lot of possibility both on a direct to consumer or building for MSMEs. Both are underserviced at this point of time, and we are a credit hungry country. We want money. Because we want money, because we know that we will, if we get that money, we will make more money. It's that. Third is insurance. Insurance, in my personal opinion, is the largest bet. Insurance penetration in India is just 4%. And that too, I'm only talking about your retail penetration. Not even getting into the corporate side of things, not getting into the agri side of things. So if someone is looking to build in thinking, okay, I want to do it in fintech and I think insurance is a good place. So both direct to investor, direct to people insurance, insurance for agri tech, and there are a lot of things happening on that space. It's a good place. India is a very agri heavy country. If you're building insurance side things for agri, you have a large enough market to tap into. And third is your MSME insurance. People don't like, companies don't take insurance, or a shop will not take insurance. If they do, they will actually prevent a lot of losses from happening. So access to credit or insurance for that matter is a big enough industry where Indians are underserviced, and there is a large potential for problems to be solved on the direct insurance, on agri insurance, and on corporate insurance side, or like physical insurance side. And for people who think they have that idea or they have an understanding of cross-border payment, then cross-border payment is also a very, very big problem. Like with Trump creating tariffs every day, with countries retaliating with tariffs, your cross-border payments take a hit. There is still a significant problem to be solved, and we are doing it through blockchain. So blockchain also is a technology which can be used for cross-border payments. It's a good place for people to build if they are looking to do so. And these are not just business opportunities; these are chances to empower millions. Like we want to create a inclusive country. A farmer insuring his crops, a small shop owner getting a loan, or a migrant worker sending money home instantly. These are the wins which would not have been thought of 10 years ago. But everything comes with challenges, and all companies have to face this when they are scaling. So I'll touch upon, because if you're looking to build in any space, these are the things you need to work upon. Even though uh, everyone has good intention at heart, with the population this big, there is always chance of fraud. You will find the next duplicate copy of anything which goes live today by tomorrow in every part of the country. You can't help it. And India, we're not willing to pay for things, and for most things. So one, trust and fraud or cyber security threats, data breaches, uh, creating fraud protections. These are things people should worry about and build for if they're looking to build in the fintech domain. Second is the digital divide. Even though 80% have bank account, only 50% have smartphones. Digital literacy is very low in rural area. How can you solve for that digital literacy? If someone is able to solve for, and they will win big. As it's as simple as that. Third is the difficult bit, which is the regulatory act, because there is SEBI, there is RBI, there is FEMA. There are a lot of regulations. So if you are looking to do so, be careful of regulations. The regulators are hard-handed. If they feel you're not on the right side, they will stop you. There are no questions asked. So these are four major things which I personally feel is relevant for anyone who is looking to build, who is looking to understand what are the gaps in this field. But my simple advice for anyone who is getting into entrepreneurship: start small. When you are small, uh, if you are looking to create a behemoth, you can't say, okay, I will go all out today. Uh, Start something, win at that, and then build on it. Because if you're looking to win at everything, you will not be. If you win at something, you can build on it and go forward. Yeah. So I think I'm done with my most of my questions. I'll just quickly most of my points. I'll quickly close and open the forum for discussions, because I think people have better questions. I can just say what Gyan I want to give, but I would rather answer questions which people have. Because financial inclusion is not a buzzword; it's a collective mission. We're solving for the country. We are not solving just to make money. We, Policymakers, founders, VCs, everyone needs to be involved. There has to be a balance. My vision: true financial inclusion is not just digital access; it's empowering everyone in the country to make confident financial decisions while having full inclusion, having access to everything. Whether it's a farmer or it's a CEO, everyone should have equal access. Let's build that future one tap at a time.
No, the day is not very far when it says one tap is for the future. So that will, I mean, since AI is into the picture now and taking most of the things away from humans. So I'm
Yeah.
so sorry. So this is with related to the same thing. So our one of our audience is asking, good evening, sir. I would like to ask you, do you believe that chatbots have the potential to fully replace human financial advisors in the future, or there'll always be a need of human expertise in the financial guidance?
Be honest, I don't think that it can be 100% change or 100% takeover. It might reduce the work by 70%, but and that will reduce the manpower cost by 70%. You'll only have to pay 30% for that, but there will still be a financial advisor who you will require, because see, as a person, I don't know what my financial goals are. I will say I want to make this much amount of money. But when someone comes and asks me, what is my goal? Do I want more income now, or do I want to create wealth? Do I want to invest in real estate, or do I want to invest in equity? Which stock should I pick? Which dividend yield is high? So I will not be able to answer all those questions myself, even if AI was asking. So AI will give me everything. Okay, as per your goal, these are options. But I personally feel that there is still a lot of questions which a human will be able to answer, AI will not be able to. At least for the next 5 to 10 years, where we are building right now.
Very, very true, sir. Very true. The next question is, sir, what regulatory innovations have helped countries like India to drive fintech-based financial inclusions?
Uh, you have to think of regulatory innovations in two format. One is what SEBI RBI does and what the government of India does. From a SEBI RBI, their core job is to protect investors so that whatever money you are putting anywhere, your money is protected. What government is doing, and for example with UPI, if you had asked all the banks to come on a requested all the banks to come on a unified interface, they would have said, why would we do that? Why would we incur that cost? Why would we digitize? Government made sure that you come on a single place, you answer to us. That made the change. So just to give you context, that it's not regulatory innovation, it is policy changes. If the
Yes.
policy changes are the right word, that policy changes determine how things will shape. You have to keep an eye out. If you're looking to build in fintech, keep an eye out on what policy changes are happening, because that will change how the businesses will operate, and that will change how new products will come across.
Okay. Great, great, sir. Thank you so much for that. Our next question goes like, first of all, wonderful webinar, sir. Can you tell me what are the psychological and cultural barriers to adopt fintech solutions in the rural areas?
See, it's the barrier, and if I bring it to a human level, if I don't know something, I will try to stay away from it. If you can think of on your own side, if you feel, oh, I don't know this, I will try to avoid it. That happens for most of the people in rural areas because they don't know. They have not seen what happens in the broader world. Now, obviously, Geo has been a game changer, which I forgot to mention, that now everyone in the most of the population in the country have a smartphone, but generational changes take some time. Geo has been here for 4 or 5 years in terms of scale. Another 5 years, you will not be asking such questions because everyone in rural areas would also have seen all the content possible on this site. But the question always is, if it is difficult for me to comprehend, then I will try to stay away. That is where the hand holding and awareness part comes in.
So today, biggest challenge is just creating the right awareness because people are also skeptical about, okay, what gonna be happen, or these days we see a lot of cyber crimes coming up with regard to that. So people are little, I would say somewhere, they're a little rigid that should we go ahead or not.
Fairly so. You should never click on any SMS or email which asks you for anything which is financial. No one should send you that.
Very, very true. And these days, I mean, even the central government is making a lot of steps in order to make people aware not to click on the links or don't get into this digital arrest kind of scams which is happening at this point of time. Right. So moving ahead, sir, just one more question which says, okay, Dikshita says, sir, I'm connected with you over LinkedIn since a couple of months. Happy to see you at the IRE talks. My question is, what is the impact of data privacy regulations like GDPR on the fintech for inclusion movement, sir?
GDPR is not Indian for that matter. GDPR is European. If you do anything in Europe which is not GDPR compliant, you are in major trouble. In India, not so much. If our data privacy laws are not that stringent, for just to give some people answers. So if you're building, you don't have to worry about GDPR unless you're going to export that product to Europe. In India, you just have to make sure if it is financial data, it should be sacrosanct, it should be protected. Uh, Everything else is already there in the market. Your phone number is everywhere else.
That's absolutely true. You have your numbers. You never know where did you register yourself and how did your number got passed.
It is not, if you're building, then you have to be careful about the financial data, which is what you have invested, where you have invested, what is your PAN, what is your Aadhaar. But your phone number, email, name is already everywhere.
Very, very true. And when we speak about this, I mean, these days we also have these AI-driven chatbots, probably like Alexa, or it can be Google Assistant, and there are a lot of such series. So what happens is everything is getting recorded. Whether you know it, whether you don't know it, the data is getting saved. I think recently there was one Alexa case where I come across where the entire case, the criminal case, was being sorted by an Alexa. So
I
this is what the technology is all about. They say, no, the darker side of the technology.
sometimes I feel when I start thinking, it's there on my phone already. I don't know how that is happening.
All right, sir. So we will take up the next question, which says, sir, how is blockchain technology being leveraged to promote the financial inclusions in the underserved communities?
So what for this people have to understand that blockchain is not solving a problem for underserved. The problem is for underserved communities, the value you will get out of them is going to be small because they're starting up in the financial inclusion. Let's say if someone like me is going to give a company 100 rupees, that the underserved community will only give 5 rupees. Now, transaction cost with the current financial system will not justify it. What blockchain does, it reduces transaction cost because it is written on a public ledger. So blockchain serves as a technology which reduces the transaction cost of serving underserved communities to a point where it becomes financially viable. So it's a solution for companies to adopt so that they can make profits out of serving underserved communities, which is at the end the underlying goal for them.
Okay. Okay. All right. So thank you so much, sir, for that. We will take up last two questions.
Yeah.
Sir, how effective are public-private partnership (PPPs) in scaling fintech solutions for the last mile?
See, public-private partnership are only scaling fintechs in the last mile are only scalable if it is going to be local. In the sense, if the of India partners with me to do so, I will still not be able to win. If I'm solving for Bangalore and BBMP partners with me, then it is solvable. Now, fintech, uh, it's mostly about creating access because government has that last mile connectivity. You have government workers at every corner of the city in some format. So public-private partnership will work where you need that access to create a solution which needs to go out to a larger audience. It will work for sure.
Great. Thank you so much, sir. We'll take up one last question. So, sir, from your experience, what are the biggest challenges fintech startup face when they're trying to serve financially excluded the communities?
Problem is same as what a normal person face: access to credit. To build a company, you need money. Uh, to to get money, you need to create a plan. How will you solve? So fintech in any company, if you are giving your own capital, that's a separate story. But creating access to capital so that you can create something is the problem to be solved. And the second bigger problem is regulator. So you have to be careful on what you are doing. What regulations does that fall under? Is it not complying with anything? Because everything apart, if you're not compliant, SEBI, RBI, government can come and shut you down. And we have seen that have to happen to companies.
Very, very, very rightly said, sir. Because these days compliances are very, very essential, and without which I'm sure nothing can go ahead. Right. So thank you so much, Manisheel sir. It was really great to have you, and we understood a lot of things about how does the fintech industry works, what are the challenges, how do we go about it, what is AI, how does it works on fintech. Thank you so much. I would love to extend my heartfelt gratitude for sharing your time, expertise, and global insights. What your thoughts, what you have shared with us, and I'm sure all of our audience and participants would love to stay in touch with you for more things. And I'm sure a lot of them, for all those people who want to dream to have a real estate, you have made it very, very easy for them. As you rightly mentioned, even a single square feet can be bought on all DRX. I'm sure a lot of them would reach you for that very, very soon. So looking forward.
Will be happy to. Just one thought which I think so I missed for anyone who is looking to build for vernacular. What this country misses is we only build for English and Hindi. There is a large enough population which is still not comfortable with these two
Comfortable with the
languages.
languages, yes.
And comfortable, they know it, but they're not comfortable. So if you're looking to build in fintech space, trying to solve for larger population, build for vernacular. That's something which is still not tapped into.
Sir, I would say even these days we see a lot of youngsters also they want to listen things in Hindi or probably vernacular languages. Despite they're well educated, they have everything possible. But still, there's a comfort zone where in the regional language it adds a lot of trust amongst the users.
So you think in your own mother tongue, right?
Absolutely.
Whatever you say outside, आप सोचोगे अपनी मातृभाषा में.
बिल्कुल सही सर. The moment we get into the local, I mean the regional language or our mother tongue, it always sounds good, sounds great, I would say.
It feels comforting. That's where how can you reduce that inertia to try something new, build for local, build in local.
That that's really nice, sir. Thank you so much once again. And I would love to extend my heartfelt gratitude and a big thank you to all of you who have joined us today. Your curiosity and enthusiasm has made this session a really meaningful one. Thank you so much once again for joining us. And I would request you all to stay connected with us. So before we wrap up, follow, like, and subscribe to GIBS IRE channel so that you stay updated with upcoming sessions to hear from many more inspirational leaders like we have today, Mr. Manisheel Gautam with us today. So till then, take care of yourself. Thank you so much, Manisheel sir, once again for joining us and looking forward to learn many more things from you. Thank you.